everyone, and welcome to the November Global Outlook video from the Economist Intelligence Unit. My name is Agathe Demarais, and I'm the Global Forecasting Director at EIU. I'm joined today by Nick Marro, our lead for global trade and China analyst based in Hong Kong. And today we're going to discuss the key takeaways from China's Party Congress and what this means both for China's growth outlook and the global growth outlook. So Nick, I'm going to turn to you for a first question. What were the main takeaways from the party's Congress, and what does that mean for China's five-year outlook?
Right, thanks, Agathe. Well, the takeaways were broadly in line with our expectations heading into the meetings, which we covered for our subscribers on our Viewpoint platform. But in one word, what we're seeing is continuity. Now, normally continuity is a good thing, but in China's case, continuity is not really what most investors want to be seeing right now. From the market angle, continuity suggests no major changes to economic policy. It suggests limited ambitions around future market reforms. It suggests that China's zero COVID stance is likely here to stay. But that all means continued stress for retailers, for overseas exporters, and for domestic consumer-facing firms, which are disproportionately made up of private firms and foreign businesses. By contrast, China's economy is increasingly tilting towards the state sector, which will have longer-term consequences for productivity and efficient resource allocation. Now, I should mention that for a while now, we at the EIU have been out of market consensus by stressing that China was not going to ease its zero COVID protocols after the Congress. And I mention that because zero COVID is perhaps one of the most consequential factors heading or really driving China's economic slowdown, but we've long been expecting this framework to persist heading into 2023, even if we see some gradual relaxations in some areas. And the signs we're seeing out of the Congress really support that view. Now, from the political side, we just got confirmation of the makeup of the new Politburo and the new Politburo Standing Committee, which are China's highest decision-making bodies. Now, we were always expecting China's leader, Xi Jinping, to secure himself a unified and loyal leadership team. But the ultimate makeup of these groups, and especially the Politburo Standing Committee, really showcases his complete and utter domination of the political landscape in China. I mean, in a sense, that's good for policy implementation and uniformity, but it comes at the cost of institutional checks and balances, including any internal pushback against policies that could be suboptimal or even harmful. And that has consequences for policy flexibility and policy experimentation. I mean, for example, what happens and what works in Shanghai doesn't often work in places like Henan or Guizhou, and vice versa. So consequently, that necessary localization component of policy implementation is going to suffer, and that's going to enhance the risk of policy drift in ways that routinely, weigh on routine economic activity along with growth potential, just like we've been seeing with the zero COVID doctrine. Now, in short, this is painting a challenging picture for China. And this carries with it different implications in terms of China's relationship with the global economy, as well as its relationship with places like the US and the EU.
That's a very interesting point, actually, and we're going to stay on this topic for the second question that I wanted to ask you. What does China's growth outlook mean for the rest of the world, the rest of the global economy, do you think?
Well, if we want to take away one thing from all of this, it's that the era of quick growth in China is likely over. Now, we at the EIU are expecting real GDP growth in China of about 3.3% this year, but our longer term view expects China's real GDP to trend below 5% over the remainder of the 2020s. And that's a radically slower pace of growth for China when benchmarked against the country's economic growth rates over the past few decades. And given China's role as the world's second largest economy, this has consequences for global demand, particularly because China's growth drivers are becoming increasingly unbalanced. It's going to become tougher to see China as an international growth engine. And that's a big change from what we saw in the years both immediately after the global financial crisis and in the intervening decades since. It carries consequences for exporters ranging from Germany to Taiwan to Australia, all of whom have become quite dependent on the Chinese market. But it's not just all about economics. I mean, increasingly, we're seeing intensifying friction between China and its diplomatic partners over a wide range of issues, ranging from imbalances in trade relationships to things like strategic competition over technology and regional security. Now, the outlook here is also challenging. A lot of China's growth and growth in markets elsewhere came from China's integration with the world economy, but that narrative is now coming undone as diplomatic strains and geopolitical frictions really threaten to upend supply chains and investment links. Part of this really reflects what's happening in China domestically. Now, Xi Jinping's political centralization and the further entrenchment of his autocratic rule plays a role here, given that many of the diplomatic frictions that we're seeing today relate to differences over human rights and democratic values. And given that Xi Jinping's administration has undermined a wide range of civil liberties in China, there are few signs that this is going to change anytime soon over the next third term in office. Now, over the next year, there are a number of important topics that we'll be looking at the EIU, including the prospects of a conflict in the Taiwan Strait, but also moves by places like the EU, Australia, Canada, and Japan as they mirror the US in terms of reassessing their relationship with China. And so as we head into 2023, the way forward really looks challenging and the outlook is darkening. I think we may need to prepare for a bumpy ride.
Thanks so much, Nick. And thanks to all of you for watching us today. You can always find our latest analysis on our website, www.eiu.com. See you next month. Goodbye.